Good afternoon, everyone, and welcome to today's panel discussion on investing into the next wave of Web3 innovation. My name is Steve. I am an APAC director at Binance. Binance is the leading crypto exchange and crypto ecosystem. So today we are fortunate to have distinguished panelists from the investment industry who will be sharing their expertise, insights. So there has been some myth about digital asset space, how it started with retails. Sometimes I think it underrates the important role that institutional investors have played thus far. Behind the booming of ICO era, we've witnessed the critical role of crypto VCs, the recent hype in the space that's been accelerated by the ETFs, adoption of digital asset treasuries. So it's very important to understand their role in the space. So I'll pass the mic on to our guests. Can you please share your name, your company, and what you do briefly, please?
Sure. Hey, everyone. My name is Carl. I run Reforge, which is the early stage venture capital firm out of New York. The areas we usually specialize in is financial infrastructure, in crypto, and AI.
Great. Hi, my name is Kelvin Ko. I'm the co-founder and partner of the Spartan Group. And we focus on investing, both venture investments as well as in public markets. And we also have an advisory business that has worked with some of the biggest projects in the ecosystem.
Hello, everyone. My name is Nihal. I'm a partner at Pantera. It's a $5 billion AUM Web3 specific venture fund, multi-stage, so we cover everything from early stage to late stage.
Hello, everyone. I'm Robbie Nakarmi. I'm an investment director at SC Ventures, and in an investment vehicle that we share with our partners, SBI, who are also deeply committed to the Ripple ecosystem. I'm very pleased to be here today. Thank you.
So we'll first dive into the first question. Oftentimes people say, you need to invest like institutional investors, but oftentimes retailers wouldn't be understanding. So if you could share what kind of metrics, indicators do you consider the most when evaluating an investment into a project?
Yeah, so for us, we primarily invest in the early stages, right? Pre-seed and seed. We rarely go beyond seed. So I think it's a case-by-case scenario, right? So for example, Pantera is much bigger. They might be investing into later stages. Though for us, founder quality is the number one metric that we track. Idea is second. Why is that, right? Because guess what? In crypto, specifically in crypto, it's very likely, high chance that founders need to pivot because it moves so quickly. So at the end of the day, I would say for early stage venture investing, sure, you need to really understand what you're doing, what vertical you're looking at, but it's the founders that matter the most, right? So for us, it's more art than science. So we always meet the founders in person, right? Even if that meant that we had to fly to Korea to meet the Doppler team, we would do it, right? So yeah, that's how we look at it.
Yeah, I would say I largely agree with Carl. I mean, we are, I would say, probably mid-size. And we do a lot of very early stage deals from seed to, I would say, probably Series B, but that's probably stretching it a little bit. And so again, for us, the founders are everything as well. Just because a good founder, no matter how challenging things get, they find a way to resolve the problem, right? Whereas if you end up with a weak founder, when things get ugly, it's very likely that they give up and your investment goes to zero, right? So in early stage investing in crypto, the outcomes are pretty binary, right? You either get a very good outcome, sometimes 20x, 50x, 100x, or you get zero, right? So that's why founder quality is very important. Other than sort of assessing the founder, obviously we also think about the idea, the products, the competitive advantage. Other things we look at are, which chains they're building on, as well as tokenomics. We also obviously think about valuation, particularly if we're leading the round and we're structuring the deal. But those are, I would say, less important than the founder.
Yeah, since people have talked about like the founders, which is obviously probably the number one aspect, maybe I'll touch upon like what we don't look at. So metrics like TVL and other kind of community-specific type KPIs are gamed a lot, and so that's something that, especially as someone from Pantera, like we do multi-stage. So at the growth stage, you'll see like $1 billion in TVL, but then you see that a lot of it's mercenary capital that goes away, and so it's really important to not like hinge your investment thesis on like numbers that can be gamed and usually are gamed pre-TGE or like pre the token coming out. And that's kind of where like community, understanding the founders, and maybe from your side, like understanding the backers before. So something that we look at for founders are the references, is a very big part of our, so maybe even when retail, when you guys are looking at projects, specifically kind of looking at who's backing them and are those good actors in the space, that's probably a very big part of just, kind of identifying what projects you want to follow.
I would say, thanks to my colleagues on the panel who've covered a lot of important points, I'll contribute a view as an institutional investor. When you are representing an institution, as I do, with 100,000 employees and operating in 57 markets, we look at venture capital investment in crypto and in blockchain a little bit differently than maybe some of the other venture capital firms in the industry who are primarily focused only on financial returns. We are certainly looking to a future in which traditional finance will move to blockchain rails, and also new and innovative use cases will be developed that don't exist today. So as an institutional investor, of course we look at founders, of course we look at the underlying technology. We also do look at the regulatory environment where a certain team or a project has situated themselves and whether that's the best place for them. But the most important thing I think that we look for is what is the potential for this to be used as a product by a bank like ours or other traditional finance institutions? And then more importantly, how will this technology or how will this product scale to bring many, many more new users? Because of course in crypto, the number of users we have is still much smaller than what we have in the TradFi space. Thank you.
So it seems there are so many different factors that they would evaluate, consider upon making investment decision. Probably it's a bit more difficult for just retail investors to consider all these different factors. Let's try to give them a cheat sheet, right? There are different sectors within Web3, whether it's DeFi, NFT, metaverse, infrastructure, DAO. Amongst these different sectors, where do you see has the most potential? So it would be easier for them to maybe follow or consider.
This is an interesting topic because the vertical that I will talk about is probably not even really considered by most ventures at this point. But there is a company in the US called Plaid. I'm not sure if you guys know Plaid in Korea. So it's a really boring company, right? So what they're doing is financial infrastructure, but middleware sector. All they're doing is connecting your bank accounts with vendors so that you can pay, right? They had issues raising money in the early stages. My opinion is today the most lucrative and attractive vertical that at least my fund is looking at is not DeFi, not layer ones or not NFTs. Sure, we do look at those, but I think what's interesting is the middleware layer that allows for the transactions of crypto across CeFi and DeFi. It's hard to kind of give an example, but like Plaid is the best way like I can communicate this. We generally have a lacking of financial infrastructure, specifically in the middleware section. Why is that interesting? The banks are not going to go build these infrastructure; they're going to acquire, right? And in the next 48 months, you're going to see a lot of acquisitions that are overpriced, but that's great for venture, right? So Yeah.
Yeah, I'll go next. So I think the space that has received a lot of capital, right, over the last, whatever, call it 5-6 years, is infrastructure, right? And I think we've built so much infrastructure that there's a bunch of infrastructure that's not being used at all, right? So I think that's probably the space that's least interesting to us. And, you know, unlike, say, in 2018, 2019, right, where you could invest in some of these very early stage infrastructure projects like Solana and so on at $100 million, sometimes less. A lot of these infrastructure investments that are coming to market, just because of how successful some of the predecessors are, like Solana, which I think returned probably over 1,000x, right? The valuations are just at levels that make no sense, right? So we're not spending too much time at the infrastructure layer. Where I think things still look interesting over the next few years is, to me, it has to be DeFi. And the reason is because, you know, with the regulations changing so rapidly in the US, I think the large traditional financial institutions are going to be coming into the space with all of the capital, right, in the next few years. And I know for a fact that many of them will be looking at how to complement DeFi into the existing infrastructure that they have, right? So with that capital eventually finding its way on chain, I think DeFi still has a lot of room to grow.
I'll be quick because I echo the sentiments that Kelvin just stated. I'm also very biased as I cover DeFi and infrastructure for Pantera. But I do think like we're in a meta where you see like probably the most successful token launches in the past couple of months, Hyperliquid Pump. It's about applications that can generate revenue. And regardless if it's DeFi or even consumer, things that can generate revenue, be real businesses, but also kind of like create the right token economics play. That's something that we're keeping an eye out at Pantera. And so that doesn't cover just on DeFi, but we do see a lot of innovation in DeFi, especially because, you know, new types of innovations in RWA, tokenized stocks, et cetera, are coming up in the future. And so there's just a lot more exciting innovation happening.
Being the last speaker is a hard job because there are so many smart people sitting next to me, but I'll do my best.
Go the other way.
The interesting thing for me is actually something that Nihal just touched on, which is tokenization. This is an area that you will see big banks, big asset managers, big financial institutions invest billions of dollars and hire thousands of people to work on in the next 5 to 10 years. So definitely, you know, watch this space. RWA tokenization of all kinds of financial instruments is very interesting. You know, our friend from Reforge mentioned Plaid, which is actually a great example of the importance of payments infrastructure and how lacking that is in crypto. You know, we don't have the Stripes and the Plaids of crypto yet, and I do believe that they will come, and maybe the builders of one of those projects will be in this room today. And I think, you know, Nihal made a great point about apps. We are, as Kelvin, you know, said, moving away from an era of infrastructure into an era of consumer-facing applications, and most importantly, financialized applications like Hyperliquid, like Pump Fund, and like many others that will be created will, I believe, drive not only the next wave of adoption, but the next wave of value to the industry. And certainly, we can see the convergence of TradFi financialized applications, for example, Revolut and Robinhood, moving into the crypto space at a very fast rate. What's especially interesting about Robinhood as a company is that they only have about 150 people working on crypto, and that's in a company of 4,000 people, but 40% of their revenue is from crypto. And other institutions and companies, they will not ignore that.
Thank you. So it sounds like whether it's middleware, DeFi, RWA, each of different sectors have their own unique opportunities, but probably at the same time challenges. I'll be skipping a few questions so we could be a bit more specific about the host, XRPL. There are multiple different ecosystems racing each other to be the main adoption. where do you see, or what do you see is the main opportunities or strengths of XRP Ledger relative to the others? I'll have Robbie start this one first.
Thanks, Steve. I think what we have today in the XRP ecosystem is the beginning of something which could be very, very big. I think it's not lost on the panelists today coming here to visit Korea and see the XRP Korea community, how vibrant and how strong it is. That serves as a great basis because in a strange way, you didn't have to build something for the users to come. Actually, the users are already here. So the job now is to build products and services to make them want to stay engaged in the ecosystem and to make the ecosystem grow. I think the benefits that XRPL has there are many, but I'll touch on just a few. The space will become increasingly regulated in the future. In Ripple and in Ripple Labs and in RippleX, you have very serious builders who have a long history of building both in technology but also in Wall Street. So if you think about some items or products in the Ripple ecosystem, for example, RLUSD, which is a fully regulated stablecoin, in a universe of stablecoins where stablecoins have become a very important part of the meta, in which every bank is looking to build infrastructure for stablecoins and integrate them, I believe, for example, RLUSD can be a very, very compelling option. And using XRPL rails to drive RLUSD adoption, I think, is a great potential avenue to also increase developer activity and community activity in an XRPL. It's like the Trojan horse, I think.
A lot of the points that I would bring up actually just got said, but I would, as a venture person, I actually think of like the opposite. Usually it's not like how they compare, it's more of the kind of negative of like the things that they can do better. But in general, I think that they're at status with a lot of the kind of big chains that we talk about today. But a big crucial part that they need to kind of activate is the ecosystem to their DeFi ecosystem. And I think they're starting that. Obviously, we see with like Doppler and a couple of other ecosystem projects. Some of them have been invested by the people in this panel already. But I think activating the community specifically to get more active on using RLUSD and stuff that exists on chain and not just the XRP kind of like token itself. That's something that I'm looking forward to. And was said before, like they have such a strong community that it's really, you guys are a step ahead just in general, the XRPL and the ecosystem itself on the community side. It's about activating that community to do even more activity on the chain itself. So we're looking forward to seeing that happen in the future.
Yeah, I think a lot of comments have been made about sort of the community, and I think that's one of the strong points that XRP has. I think the other sort of strength is just the strength of the balance sheet, right? I mean, if you look at what's happened in the crypto space over the last 10 years, I mean, there have been a lot of assets that were launched around the same time that XRP and some of these early coins were launched, but many of them have faded into irrelevance, right? And somehow XRP has been able to stay sort of relevant and maintain the value of its token. And given the opportunity set that's been opened up now, with the Trump administration and all the regulatory changes that are happening, I think the Ripple sort of executive team has also been quite quick to not just fend away some of the previous problems that they had with the SEC and so on and so forth, but also take advantage of the market opportunities, right, through some of the acquisitions that they've made, which I think are quite clever. And will sort of be some of the early drivers to help move the ecosystem along. For us, when we invest, we are pretty much chain agnostic, right? So we can look at different verticals, we can look at different chains. So we're just basically trying to explore the different ecosystems and look for the best founders, right? And I think if you look at crypto, and notwithstanding the fact that you have chains that are active today like Ethereum and Solana, but I think we're only probably 10% of the way there to ultimately what the TAM will look like, or maybe not even 10%, right? So there's still, I think, a lot of ground for further development of the space and for other winners to emerge over time.
So this is what it feels like when you get to speak last. Yeah, so I think largely large institutions in the U.S. are having identity crisis at the moment. Some are launching L1s and some of the other ones are launching L2s, right? A few entities are getting to DeFi, though I think it's pretty clear that a full stack, institutional friendly solution is very, very much needed, and everyone's trying to get there, right? So I think with XRP Ledger, and then in the context of Ripple, they're pretty well positioned to capture a lot of the mind share as well as the market share when it comes to crypto native financial use cases. XRP Ledger has been around for over a decade, right? It's actually older than Ethereum. Korea accounts for 25% of XRP volume, so I'm sure many of you understand this. So overall, I think it's less about any siloed vertical, but more about like, hey, if you want stablecoin, you want to transact in crypto, where do you go, right? Like today, you kind of piecemeal this, you go different banks, custodians, on and off ramp. I think in the near future, you go to one entity and they will be able to offer you most of that stuff, right? And I think XRP Ledger will be a pretty interesting place alongside with like many other L1s, right? Ethereum is amazing, Solana is as well. But overall, yeah, I think that's how I view the ecosystem.
Right. Thank you, guys. XRP has one of the largest retail investors globally, and we are excited to witness more of a real-world usage in coming future. Given the time restriction, I'd like to ask two separate questions, and whoever wants to respond, please do so. First question, prediction of what will happen in this industry by 2030. And last question, if you guys have any last advice to retail investors from an institutional investor perspective. So whoever wants to go first.
By 2030, I feel like a good portion, now this is where I'm gonna just say numbers, but that don't hold me to it. It's like 40 to 50% of FX will happen like via crypto. I think like we're already seeing like the tokenization, stable coins, and non-USD denominated stable coins also specifically showing up in different regions. And so I think a lot of FX is going to move on-chain specifically, and a lot of PSBs are going to be kind of dealing with on-chain FX kind of technology.
2030 is 5 years from now. My hope is to see red envelopes during Lunar New Year will be sent in the form of Korean won stable coins or USDT, however you want to do this. And maybe the next generation of kids will prefer a digital crypto wallet over a real wallet. Yeah, that's simple.
Sure. So inevitably, Kelvin, Robbie, any last advice to the retails from the institutional investors' perspective?
Well, I think you're talking about trading, right? Investing.
Trading, investment.
Yeah. Well, I think first of all, there are a lot of coins, right? I think this cycle alone, we've seen millions of coins coming to market. Obviously, probably 80% of it is stuff that you shouldn't touch. Maybe 90% even, right? But first of all, be open-minded. Explore the different the different tokens, different ecosystems, because there are a lot of ways to make money in crypto. And then the second advice I would say is just be careful with leverage, because you can get leveraged very easily in crypto, but it's also the fastest way to lose all your money.
My advice to the people in the room and to our friends who are consider themselves retail investors in crypto. I think for a long time, finance was controlled, by very big banks and the government and things like that, and that's always been a theme that's been important in crypto since its genesis moment with Bitcoin. Now you're going to see a lot of big banks, such as myself and many others in the room, and other very large companies, getting involved in crypto. There are some people that have been, I think, discouraged by this and thinking that, it's becoming more corporate and it's becoming, dominated by big companies. I don't really see a place, for me. And I would say, absolutely don't be discouraged. You are in a really good place right now. A lot of people said the same thing, when big internet companies arose in the late 90s and early 2000s. That didn't mean the internet was over. It meant that the internet was validated as a technology. It meant that the internet was validated as an infrastructure for things of value to be built. And I believe crypto is in that moment today. So lock in, that's my advice.
So thank you all to our panelists for sharing their expertise and knowledge into the space. Whether you are an investor, entrepreneur, or just an enthusiast, the future is bright. And I hope all the audiences have found today's session both informative and inspiring. Thank you very much.